welcome everyone to this episode of Payment Innovators. I'm your host, Adrian Sanders. I'm the CEO of Chargehound, a PayPal company as of recently. I'm here with my special guest, Melissa Guzy, who is one of the founders and partners of Arbor Ventures. She is focused on fintech around the globe, and she's been a stalwart for the last couple of decades, I believe, in the fintech space, making some incredible investments in companies like Paydi, TrueRecord, Grab, kind of you name it in the innovative fintech space. Before that, she was a MD at Vantage Point Capital Partners, and really saw early stage around what was going on in Asia, Europe, and Silicon Valley. And I'm super excited to chat with her about the future of fintech, where we're going from the VC perspective. For all of you founders out there, this is particularly interesting. So Melissa, thank you so much for joining us.
Well, thank you. Thank you for having me. I look forward to the discussion, Adrian.
Yeah, always. So I think this is a question, obviously, we ask everybody post, not post-pandemic, but, we're a year and a half into a major sea change in the world, and particularly in the fintech and payment space. It's been an incredible change. I would love to just get high level your thoughts personally on what you've seen, sort of Arbor's perspective, and what you guys are excited about, what you're worried about, and just high level any major changes that you've seen over the last year and a half.
Well, yeah, COVID's been great actually for the advancement of fintech and really the digitization of the infrastructure around the world. So it's been an accelerator. I think when we went into COVID, everybody was quite cautious. What is this going to look like? Clearly in Asia, we went into it first, and then it happened in Europe and in the US. I think post-pandemic, it just will continue. People were concerned that some of the changes were going to be short-term, but as I like to say, whether it's 3 clicks, 3 months, or 3 years, behavior sticks, behavioral changes. And I think we're seeing that. I think, it's digital, right? And there's a lot of industries, even within financial services, that need to advance. We've seen, whether it's bank branches being closed down, or the acceptance of payment methods, or cross-border transactions need to be a lot easier. And with all the digitization comes an increase in fraud, as we all know, and as you know, particularly, right? Chargebacks and the battle with the airlines.
Very much so, yeah.
Yeah, and so we just see more of this continuing. And then I think, when you look beyond the pandemic, there's some interesting areas. I think the rise of CBDCs, central bank digital currencies, will again be the next transformation point for at least payments per se.
Interesting. And I guess on that perspective, and kind of like you said, behavior, it sticks, and once it's there, you've opened the Pandora's box. You can't really go back. Did you notice that those changes, were they different in APAC versus EU or the US, or is it all kind of the same, QR codes, contactless, etc.?
Well, I think that's a great question, because Asia was all about contactless and QR codes, at least China South. I think what's really interesting about the pandemic, though, is much as the US went into chaos in the very beginning. I mean, now we've seen a really high vaccination rates. People are traveling, starting to move about. Where in Asia, we see pretty much all the countries still shut down, and they've been quite insular. And so, and Europe, of course, is struggling to open its borders, right? Even within Europe. And so I think how and when countries open up will play a pretty significant role in the recovery and the innovation, right? And how innovation happens, because you need movement, you need flow, you need people, getting stimulated with new ideas. And I think, this will play a pretty dramatic role Also, I think governments will utilize COVID as an excuse or maybe a reason for increased digital regulation, which will then have its own consequences and potential investment areas.
Yeah, that's an excellent point. And I hadn't really thought about this like on a business level, but on a personal level, just recently, now that, friends and family are all fully vaccinated where I live, we're just like finding reasons to go out and like, you know, go to the toy store with my kids, and it's like something that, wouldn't think twice about, a couple of years ago. I'm now like excited to go and buy the puzzle or whatever it is. Um, and then that like sort of begets all this other momentum of like, all right, well, now we'll meet up with those families with those kids and we'll do something and we'll order food or, make food or whatever. And so all of that sort of has this newfound impetus to it, I feel like. It's like pent up basically. So that's interesting to think about. These different countries are going to experience, obviously not exactly the same, but some form of that in different stages. From Arbor's perspective, I know the market has been hot. Can you talk a little bit about, just how on the macro, how you guys have felt? Has it been competitive? Has it been exciting, frustrating? Anything there I think would be super interesting.
Yeah, well, I think venture is always competitive. I love it when people say, oh, venture is more competitive. I've been doing this for 21 years. Venture's always been competitive, right?
Right.
The days of being truly club deals, that went away like 30 years ago or something. I think it's a competitive industry. People want to win, right? They're type A personalities. I think always in a sector, you have to stay ahead of the curve. You got to be thinking about what's next, not what was. And so where things become super competitive is once they're obvious, a lot of late stage money can pile in pretty quickly and valuations can, accelerate. I think there's also something else happening in the world, which is venture valuations feel somewhat disconnected from public markets. They all look to the US public market and then they apply the same valuation metrics across the world. And you're like, well, wait a second. How many companies in this part of the world have actually gone public in the US?
Yeah.
And so that's kind of a little bit of what's going on now. And I think as a venture investor who thinks long term, the way we like to think about it is, do I want to own this company during downturn? Do I believe in the management team? Are these people I want to work with for the next 8 or 10 years as an early stage investor? If the answer is yes, that plays a big role. But I think, you got to be thinking about the cyclicality and the volatility we may come into in the markets here, especially if the US passes this 40%, capital gains tax. That's going to play havoc with the markets. So I just think there's a little bit of, let's take a metric and apply it to everywhere around the world when that's just not really valid as far as thinking about valuations and exits. And so therefore you have frothiness. You have frothiness in certain markets for sure.
Yeah, I feel like at least from a founder's perspective, and someone, I have not been in the game as long as you have, and I haven't seen as many cycles, but I've definitely seen this cycle of especially like newer VCs who are just like riding the hype train or the gravy train, and they're just like, well, it doesn't matter because everything is moving up and to the right, and so you just get in and whatever. But they don't really have this strong thesis, like you said, about, well, what happens literally in 10 years, right? Because in a decade, what does the world look like? And you are talking about investing in people fundamentally. And so I do think it's interesting right now, and I don't think it's a bad thing that more founders are getting money and getting less dilution. I'm a big fan of that. But I do remember 2012, right? I remember that era in New York and in San Francisco. And I have a lot of friends who are both VCs and founders who some did very well, and others I think probably would have played it differently. One thing I wanted to touch on that I thought was super interesting, like you said, is that we look to the U.S. markets as the benchmark, both in the private market and in the public market, but the world is not the U.S. I actually think that that's a sadly, in some ways, very fresh perspective from a lot of coming from you. That's makes a lot of sense. But a lot of VCs, I don't think really have thought that way historically. I feel like Arbor, that is a big part of what makes you guys so fantastic, and in some ways have been unique, is that you said, look, the way things work in Japan is not the way things work in America. The way things work in Southeast Asia, is not the same. Do you think that other people are catching wise to that, or do you still feel like, again, there's sort of this disconnect between the investment culture and the real world, the multicultural world of how different countries and different cultures play out?
Well, first of all, thank you for the compliment. I think unless you live somewhere, it's hard to understand the differences. I mean, I jokingly said when we went to open our bank account in Singapore for Arbor, I did 16,000 steps, just in and out of banks with paperwork. I mean, what people don't realize is still around the world today, whether it's KYC is still in person, or we need a wet signature, they don't use DocuSign, or, just culturally, people are different. I think I got some really good advice when I first moved over to Hong Kong from a private equity firm who had been in Asia for a while. And they said, when we tried to take the advice of our US team and invest like a US investor, we lost money. When we started investing based upon the market and the market conditions, we started to make money. And I think you have to appreciate the culture. You have to appreciate the rate of adoption. You have to appreciate the nuances of these countries, of where you're investing, in order to be a good global investor. Now, you may get the short-term hype behind a theme. Everybody's doing a Robinhood, or everybody's doing a neobank, but the reality is going to be very different. And,
Yeah.
and I even love the category of buy now, pay later. It's a category. None of them are alike. Affirm and the US guys and maybe Europe are very similar. But when you get to Asia, we have a category called buy now, pay later, whether it's Paydi or Akulaku in Indonesia, or we did Tabby in the Middle East. They're all different.
Yeah.
And so I think what happens is you get these categories and say, oh, I want to do the buy now, pay later of Japan, or the buy now, pay later of Indonesia. But you have to understand the nuances. And if people really dig into the nuances, sometimes they get scared by them, because, as you know, financial services companies in Asia have grown up in a horizontal way instead of just a vertical way. And they're like,
Right.
well, they're doing a little of everything. And you're like, yeah, well, that's how it goes.
Yeah. There's a lot more unbanked people in Indonesia. And so when you think about building products for them, it's not going to be putting 1,000 random branches, physical brick and mortar branches everywhere. Right. And I think that's,
Or even on the buy now, pay later, having an e-commerce storefront. Well, why would you mix e-commerce and buy now, pay later? Well, because how are you going to go acquire the customers? And I think it's just a very different way. So what you need to do is, when you do invest in like categories across the world, you need to understand what you're looking for in the management team and how they think about things, and then appreciate they know their country better than you do.
Right.
And of course, we never invest in a country where we don't have an LP relationship, or we don't have someone on the ground.
Some empathy. I agree 100%. We obviously service customers in the EU, but when you talk to people at a high level about chargebacks, they're like, oh yeah, chargebacks, I get it. It's, well, actually, acquiring banks, issuing banks, that's a different story in the EU. That's not like the US. And so even something as sort of simple in some ways as a chargeback, right? Actually, it's completely different. And the impacts, the financial impacts, the way it works, the way we think about it, when we have those conversations with those merchants, right, it's important for us to really, start from there, and not just come in and be like, oh yeah, we know chargebacks, of course. So we're just going to, tell you that everything will be fine and it's all the same, because, that's not how it works.
Or in Southeast Asia, Adrian, if you go in and talk about chargebacks to airlines, they'll say to you, can you solve my FX problem?
Yeah,
exactly. That's a bigger problem.
Totally. It's exactly right. Well, and I guess on this sort of note about how you go and evaluate investments and think about, founders you're going to back, you need a minute?
1 second. I need 1 minute. Sorry.
That's okay.
Hello? That's okay. I'm on call. You can just go to boxes. Yeah. Sorry about that.
No worries.
Okay, life
All
takes
right.
over.
This is the new remote work. So talk to me a little bit about, like I said, kind of what I was saying is that you come from this perspective that your founders, your management companies, they really need to understand not just the products that they're building, but for whom they're building it for in the localities that they're serving. Tell me, I think that is very prescient, but also if you're a founder right now and you're looking to build out a fintech company and you want Arbor to kind of invest, like what are these core traits? Is that it, or is there more to it than that? Like, what are you really looking for in that early management team and product team?
So we've done a lot of work around this. We actually have the greatest data set in behavioral traits of successful founders. We just don't publish books about it. I think it really comes down to what we've learned is it's about judgment and reasoning. And so getting down to how people think about the company and also how they react to things, and how they think about team building and how introspective they are and how much they listen or don't listen to market feedback are the things that we really care about. So we are doing and have done a lot of work around founders. We all know that early stage startups will have to zig and zag. So the business plan you bring me today is probably not the business plan we're all going to be clapping about 3 or 4 years from now. That's okay. I think it's about learning about their thought process and about who they are. That really drives the difference for us at Arbor. So
That is
we like a little bit of scar tissue, whether it was successful or unsuccessful. So, but that's not hard in stone because we do a lot of first-time founders as well. But also like just how you think about going about building a product. To me, it's product market fit. Like that's, forget all the hoopla and everything else. It's about product market fit. Will the dogs eat the dog food and why? And what happens if they don't? How are you going to go about that? And their ability to listen to those key points. Then how do you bring that back to engineering, right? And how do you bring that back to the company in a sense to reposition the product or redo the product or even abandon the market you were in, right?
Right.
And that's what we look for in early stage founders.
I obviously love that. And I have a similar thought about this after having accumulated a lot of scar tissue over my time. My co-founder and I, Dimitri, whenever we really get into it, Dimitri's our CTO, and when we've gotten into it a lot, we've worked together for a really long time. We've been working together for a decade, and we get into these moments where we're constructive but combative, right? I'm a business lead, he's the product lead. A lot of times those things do not align early on. But we always talk about, well, what is the work that we're doing right now? And the work, the way I sort of define it is kind of what is the thing that needs to get done to move us to the next step? And the work can be any number of things, right? But it's usually not, it's like usually 1 or 2 things that you need to do right now. And it's not the other 400 things that you could be spending your time on. And I think that the scar tissue I've accumulated is all the energy and blood and sweat and money and time I put distractedly working on not the work, right? And sometimes you just don't know what the work is until you've really had to plow through it. But it really that resonates with me a lot. It's this idea that how to get to those essential decisions that sort of move the product forward or validate a hypothesis or generate that first stream of revenue. And if it was easy, everyone would do it. And people attribute it to you look backwards at an entity and you say, well, these people were geniuses. And it's they're not geniuses. They've bled a lot of blood, right? And they've done a lot of work, right? And they're smart and they're talented, but I just feel like that's table stakes nowadays.
And they listened along the way.
Yes.
And they actually were able to go into that meeting and hear something and focus in on that. But we're not a weather vane where they change the product after every single meeting, because we see that too,
Exactly.
right? I mean,
Yeah.
So I think it's that unique skill, and it takes it. You can learn it, right? But I think it takes discipline, and it takes having a little scar tissue to know what to do
Yes.
or not to do. I also think it's the way you. I also would like to say the role of VCs with startups is changing quite a bit, right? I think we still have this mix of sort of, I don't want to call it old school and new school, but I think at the end of the day, we're partners with whoever we invest in. And it's a long-term relationship, and we're going to disagree as well from time to time. It's the ability to talk through those issues and each be able to communicate and hear, and then get to the right conclusion. And, I still watch it today when a VC feels like, the management team hasn't responded, and they go and undermine the CEO and the team. You're like, well, what did that accomplish? You just now wasted like 20 hours more of everybody's team time on the management team and on the board to go deal with that. And I think that's kind of destructive. So I think for us, it's not only, we've gotten pretty picky about who we co-invest with as well. And to me, that's just as important as the team.
Yeah, that makes total sense to me, especially as the company starts to scale, who is on the board starts to become, I mean, and especially for founders, right? Like you are ultimately beholden to the board in some ways, and it can get toxic if it doesn't make sense, right? And I also just think like the alignment, I don't know, I've seen some interesting situations where the alignment and incentives of the board don't make any sense compared to where the founders are, want to go. And then it's like, well, if you don't have a mutually agreed idea of what success looks like, then of course you're not going to move forward, because there's no direction to move forward, right? There's no way to say that you're actually moving forward since everybody disagrees. And it happens, but I've had some great investors, so I've been lucky in that way.
Yeah.
But that makes a lot of sense. So we kind of talked about, I think that's sort of an interesting segue into something I want to talk a bit about. You said over time you've realized who you co-invest with is very important to you. Is that, what are some other things from your perspective that have changed over the years that have become more important to you as an investor? Are there things that you value more highly now than when you started out as a VC?
Oh God, yes. Like it's like night and day. I mean, you have scar tissue do as an investor. Nobody likes to
Right.
talk about it, but you do.
Right.
You need to have a couple of experiences. Like, listen, there's VCs who get super lucky when they're young and and new, and they're like, yeah, this is easy, right? I've been doing it for a while. I've gotten a lot better. I mean, we just had, our returns are getting really, really good, right? I'm not going to
Right.
talk about it, but we've had a great time at Arbor. But I think that's really because the experience is the same way, right? Which is, when to sell, when to double down on a company, when to not take your pro rata, when to, do an M&A versus an IPO, how to deal with management teams in a much more constructive way, have those hard conversations, be the hugger, be the mirror. You learn these, like, I think, people who don't admit or say that, venture is really straightforward and easy. If it was, listen, the correlation of success from fund to fund would be a whole lot higher than it is, right?
Yeah, the Kaufman report would have been a lot kinder.
Yeah, and I think at the end of the day too, a lot of people will talk about their winners, but how many losers did how many did it take to get there? Nobody likes to talk about those things, but it's a reality in venture as well.
Right.
I think that these are the things that are important, and I've become a much better investor now than I ever was.
Cool. That's interesting. I want to talk a little bit about something that I think you probably know more than 99.9% of the people on the planet. So let's say I'm a founder, I'm in the US, and I want to get into APAC.
Oh God,
And I'm
not again. Oh,
well,
you mean as a company, or you want to
as
move
a
to APAC
company.
and start a company?
No, as
Okay,
a company, as a
okay,
company.
okay.
Yeah, I've got a successful company and I want to move into APAC. What are the top three pitfalls that you've just, if you were like, Adrian, what are you like, before you do anything, make sure you don't do X? What are some, I would love to hear sort of your perspective.
Oh yeah, this list is great. Okay, number one, don't move anyone to APAC who's never lived in APAC to head your business unit. Bad idea.
Okay.
But that
Yep.
usually takes people 2 fires to get to the right answer. That's my
Yep.
experience. Okay. Next, your product as it is may not fit APAC. And so if you say, but I know they need the product and they should need the product, well, okay, you have that discussion with yourself, but that doesn't mean the market needs it and wants it the way it is. Right. You know, and 2, you hire a bunch of people before you hire the lead person to run the organization. Those mistakes I see every single day.
Right.
And I go through the same list over and over. And usually people look at me, they, you know, it takes people maybe, like, we have a couple of companies. No, I can't say that. No, we have never had a company who've listened right from the beginning. Like, but after the first one, they do, like, most of them come around and say, okay, Melissa, I get it. Sometimes it takes them 2 fires to get there, but that's okay too. Just don't spend a lot of money and waste a lot of time. But and also, like, APAC's a big place, right? And who you hire in APAC to cover the region is important. And there's a reason why the investment banks have APAC ex Japan, right? Because Japan sits on its own. It's also the 3rd largest economy in the world. So I think these are the learnings for people who want to go expand to Asia. And everybody wants to chase the 1.3 billion toasters in China, right? Don't. You're never domestically, you're not going to be successful in China. Can you deal with the Chinese companies who are going global and need things? Absolutely. And so I think that these are the mistakes that people make. But
so is it worth it to go into APAC, or like, when is it worth it is maybe a better question.
When you're prepared to hire a senior person, you have a product offering, you have the mindset that you can tweak the product to meet the market, you can go into APAC. I mean, it's a huge market, and you know, it's only going to get bigger. And so I think it's not about whether if your product, for example, what you did, Adrian, obviously, but there's lots of problems besides chargeback risk. I joked about the FX, coupon fraud, account takeover. Like, there's all these other things that that are important, along with the one thing you have. And in some regards, having that product suite is sort of more the right time to go into APAC.
Yeah, that makes sense to me. And yeah, I mean, right, we leveraged the infrastructure of payment processors, right, that are already done a lot of heavy lifting getting into regions, right? And so, you know, but it's effectively accomplishing what you're saying, which is those orgs are already offering a suite of products. We're just piggybacking off of that. We're not just like landing in, you know, Singapore saying, hey, we're here to do chargeback representment for random company X or whatever. So that makes a lot of sense. What can we learn? This is a 2-part question. What can we learn as US based, or, you know, Western based startups from APAC companies? Like, what are the learnings?
Yeah, I mean, there's a lot of learnings, and you know, and when it comes to payments and neobanks, I mean, Asia's led the way. I remember a couple of years ago, you'd come to the US and you talk about QR codes in Asia, and everybody would be like, "That's crappy technology. Here's the next thing that's going to work," and you're like, "Doesn't matter. Look at the scale, right?" And so I think, you know, maybe the most sophisticated technology doesn't always win, but ease and use of adoption does. And so I think also on the payment side, clearly, like what Alipay has done, and I mean, the wallets has been amazing, and how they think about things horizontally and not only just vertically is also a really big learning. And I think they've done something. They don't have the tech expertise necessarily, but is in the US. But what they do have is business model innovation and the understanding that what consumers want.
Yeah.
And I think that's really, and mobile first. Like they've always, I mean, if you think about the number of people in Asia who only access the internet on mobile, I think it's probably the larger than the US population when you take Southeast Asia.
Yeah.
And so I think these are some of the learnings. And they're also less of, the infrastructure piece on financial services. When you look at the banking stacks from WeBank as an example, they're extremely sophisticated and modern architectures. And I don't think we've seen that in the US necessarily, right? We started, our idea of banking has been starting with issuance of cards,
Yeah.
and then building on that, where these guys have built really sophisticated banking software stacks.
Yeah, for sure. And I think we're starting to see in the US, particularly, I feel like, this notion of the challenger bank not just being a free checking account or potentially doing more, but it is just like 20 years behind in some ways, the suite of offerings that are available in APAC. So, but then do you see that as an opportunity then as an investor? Are you looking for companies here who can bring some of that, business model innovation to the US market?
I think it's just different. And that gets back to my original comment, which is you don't try to overlay what works in one place necessarily with somewhere else. I think the US, there's lots of innovation that, like we're in true accord, right?
Yeah.
The debt collection and really financial wellness side. And, that just wouldn't be applicable in Asia, at least now or for foreseeable future, right?
Right.
Maybe 10 years from now. So I think it's hard to mix and match. And I think you got to appreciate like each thing for what it is.
I think the thing that we noticed is that, the proliferation of credit cards in the EU, because I lived in the EU maybe 10 years ago and no one had a credit card, right?
It was all
like
debit.
carte bancaire, right, in France. And but now, we're getting inbound from a lot of EU companies saying, what's the deal with these credit card chargebacks, right? And not just what are they, but why is the scale of these so intense? And then we look at their chargeback ratios and they're still way lower than the US market, right? And so the pain is more visceral for them, but the actual scale of the problem is much smaller than in the US, where everybody's like, oh yeah, 50 bips, like that's table stakes. I'm like, 50 bips, that's a lot of money, right? So I think that's kind of to your point a bit, that things are different. But my point on this a little bit was, are we going to start, is there anything that you see in the US? Because I mean, we are using QR codes, we're using Apple Pay and things like that. Are we going to start to see US consumer behavior get more sophisticated and drive that? And if we are, do you see it anywhere in particular that's of interest to you?
I would say I still think it's going to be different. I think there's learnings from Asia, right, that you'll see overflow. But I would say I can't think of something that we said, okay, we've seen it in Asia, we're going to replicate it in the US right now. We're going to go replicate it in the US. I haven't seen that. I would say you would think more about Asia and the Middle East, replicating it there. But I can't, and maybe the Middle East is a little bit of an intersection of Asia and Europe. But I can't say, we've seen something in Asia that we want to go think about replicating it in the US.
All right, talk to me a little bit. This is an audience Q&A. Talk to me about digital currencies. Talk to me about crypto. We've obviously seen with Ethereum and NFTs and, that big run of people buying gifts and stuff for $1 million or whatever. But I would love to just hear high level, what do you think? Is it interesting to you? Is it too speculative? Is there interesting companies doing stuff there?
what's going to end up happening is there's two things that are going to come out of it. One, the infrastructure that's being used today for crypto is going to become really relevant for CBDCs. And so from that perspective, we have a real interest. We at the firm don't buy and sell crypto. I do personally, but not, at the firm. I think what we'll end up with 10 years from now is it paved the way for CBDCs. I think with the blockchain, it's a database structure, right? And, we went through a period was blockchain everything. I think we're past that now. And I think what'll continue to emerge is, innovation and iterations of the blockchain or something like of that ilk. And then, that will continue to be used, or it will be used. And so I see this as sort of an interim step to where it's going. And it's just a question of where as a firm do you want to invest at any given point in time?
So is it similar to in some ways the conversation around when internet banking was first around and people were like, the internet's going to replace banks, and it was more that the internet just drove banks to sort of keep up with the times? Is that sort of your perspective?
I think it's interesting you said that, because the best example that comes to mind of that is overdraft protection with Chime, right? At the end of the day, the banks are just going to reduce overdrafts, right? Which was a differentiation of Chime, right? But yeah, I think what happens is whenever you see momentum build into something interesting, I mean, more and more banks, more and more endowments and pension funds are looking at how to invest in crypto. I mean, the big thing you got to solve is the custodial issue, right?
Yeah.
And make it easy. I mean, my Coinbase account is still locked out. I get in, I get locked out, I get in, I get locked out. I mean, at some point, not to pick on Coinbase, but you got to solve that. Like, you're going to have a tired consumer otherwise.
Yep, for sure.
So I think all of these is part of a journey to somewhere more sophisticated than where we are today.
Cool. Last couple of questions. This is another one from the audience. Is there a standout moment from your career as an investor that, like, just a moment where you really felt like, you reached the top of the mountain, or just extremely satisfying that you look back on?
Never satisfied, always want to do more. I mean, I think what really drives me is to get to work with great entrepreneurs, right? And meet some great people along the way. I don't think you ever reach the pinnacle. Maybe you do. And if you do, maybe you should stop. But I think every day is a learning experience. Every day is a journey. But yeah, I mean, clearly with our returns where they are and our loss ratios being as low, we're pretty, we're doing well, right? But I never feel like it's the pinnacle. There are very satisfying moments where you went into a company early and it was a real struggle, and then you come out the other end, and that's probably the greatest feeling you can have.
Yeah.
That's a much better feeling than when you invest in a company, it just happens to make money and okay, you got the money. But when you really are in there scraping with the CEO and, solving problems, and then you have a success, it's pretty rewarding.
Yeah, for sure. And then the last questions from the audience. You were big on the notion of sort of value generation, and just like like we kind of talked about, what is the problem that we're really trying to solve, and are making the right decisions. How do you define sort of value generation for a startup? Like, is there a succinct definition or a thesis that you sort of have?
It's how big the pain point is. And maybe not today, but tomorrow.
Yeah.
And people pay for pain points. So that's it. There's no formula for that. It's really sort of your sense of the market.
Yeah, totally. That's a great answer. And I feel like there is a divide among VCs of how long-winded that answer can get, and how murky it gets, versus people who are just like, yeah, are you solving a problem? How big is the problem? And then, is your version of solving it the best, right? And are you dedicated to that? And do you want to see it through?
Yeah, and I think also we're seeing more and more, innovation in industries where we haven't had it before using technology, and there's just not going to be necessarily answers right away. And so I think you just have to have your own conviction about that.
What are you when you look so I mean, Arbor is doing fantastic. And congratulations again on all the success. But when you look 10 years into the future, where do you want Arbor to be?
Well, we've always said we want to be one of the top 3 fintech firms globally. I think, as you mentioned, I think our global perspective is a differentiator. I don't think we want to ever lose that. It's also it's pretty interesting, right, to see how innovation trends change across the world and how financial services is changing across the world. I just finished doing a deep dive in insurance for the last couple of months, right? Didn't feel like we had enough, real knowledge. We had a VC's knowledge, not a inner working. So
Sure.
we went ahead and did that. And, those are, we just want to continue to help great entrepreneurs fulfill their dreams and innovate.
Cool. Awesome. Well, Melissa, thank you so much for hopping on and chatting with us. I really appreciate your time.
No, Adrian, thank you very much. And it's always good to see you, and congrats again.
Thank you. Yeah. And then for everybody else, thank you for tuning in. Next up on Payment Innovators, we're going to have Juro Wade, the Chief Growth Officer at Phoenix. So that will be a fun one as well. So tune in June 23rd.